welcome to the latest episode of Monitor's podcast. Today, we are diving into one of the biggest shifts happening in the industry, the consumerization of B2B finance. Our guest today has a sharp take on what the industry often gets wrong about consumerization, why embedded finance is the future, and how AI is not replacing credit officers, but amplifying them. If you've ever wondered what it really takes to deliver a frictionless experience for customers in a B2B finance environment, or what fintechs are doing better, this conversation is for you. But before we begin, let's hear a word from today's podcast sponsor, Valiant Finance.
Introducing Valiant, the embedded lending platform that connects capital across your sales channels. For manufacturers and resellers, it's a way to automatically attach finance options to every quote. Faster deals, bigger transactions, zero friction. For lenders, it means being embedded directly at the point of need. Valiant, capital connected.
Hey everyone, I am Rita Garwood, Editor-in-Chief of Monitor. Joining me on the podcast today is Ryan Ragland. Welcome, Ryan. Thanks for being here.
Thanks, Rita. I'm super happy to be here.
Awesome. So can you just tell us a little bit about yourself just to get us started?
Absolutely. So my name is Ryan Ragland. I'm the VP of Enterprise Solutions at Valiant Finance. For those who don't know, we help OEMs, distributors, and lenders modernize their workflows, connecting quoting, credit, and funding into a single intelligent experience.
Cool. So I wanted to just start off talking with you about the consumerization of B2B finance. It's something that we've been talking about for many years. And I feel like there's some misconceptions out there. People don't seem really clear exactly what it is. How do you see it? What's your take? And what do you think people get wrong about it?
Yeah, and that's a great question. I think people think consumerization means making everything simple, and that's not the case. What it really means is making complexity invisible to the end user, right? You can maintain credit rigor and compliance and structure, but presenting it through a user experience that feels intuitive and instant, that's what consumerization is about. It's not about dumbing down, it's about designing up to meet the psychological sentiments of buying that we face now because we've all become so accustomed to being able to get a mortgage in your sweatpants on the couch. So it's about bringing modern UX, transparency, and speed to a process that's traditionally incredibly opaque and arduously slow. So it's not about copying consumer finance and B2C models. It's about adopting the expectations that consumer technology has now hard written into all of us.
That makes a lot of sense. Well, what first got you into just this whole topic in general?
Honestly, frustration, right? I mean, going through it yourself, like as an entrepreneur and being in business and knowing how quickly you can, again, in the consumer world, you can go online and finance a car or get a mortgage, or even these days, like finance a burrito from Chipotle. It's crazy how fast you can get things done, and then realizing that trying to acquire for your business $25,000 in managed services and hardware bundles, you get stuck in this paper chase and this endless loop of back and forth. And not only that, finance is an afterthought, right? When you try to acquire something for your business, it's here's your net expense, right? Here's your CapEx right up front. It's an afterthought, wherein every day, you go to buy a pair of shoes online now and it's buy from this or finance from this. So what I see and what I saw is this massive gap between what's possible and what's normal in B2B lending was just too wide, right? B2B buyers, at the end of the day, they don't stop being consumers the minute they punch in and start their work day. They're still consumers. And those experiences, they're more and more sought after in the B2B world, and no one was meeting them halfway. So, we really just looking to help the industry catch up, to show that fast, compliant finance isn't just possible, it's inevitable and will become table stakes to play.
Yeah, that's so true. And in this industry, just a couple of years ago, people, when they were saying, "Oh, we're getting up to speed with DocuSign," and things like
Sure.
that, it's okay. That's you're kind of way behind if that's where you're at.
Exactly.
Yeah.
Exactly.
And I know a lot of people say, this industry is super relationship based and there's a lot of complexity behind it. And so in some of those conversations that I've had with people, they point to that complexity and they point to the fact that, people need to have this relationship between the businesses to create the best funding possible. What do you have to say to that? Like, where does B2C is a little bit less, it's more transactional. But what do you have to say to that whole argument?
No, I wouldn't disagree. As a matter of fact, I think, and we hear this term a lot in the industry, like AI, and it's, the kind of this big scary, it's like a cloud looming off on the horizon, and we don't know if it's going to blow the hut over, if it's just going to be a little shower. Um, I think relationships are going to become even more important. But I don't think, regardless of how strong your relationship is with someone, that the expectation of speed and transparency and efficiency is just going to magically go away. I think AI enabling us to automate a lot of the mundane will allow us to refocus on the meaningful. And that meaningful part is the relationships, but the impact that technology needs to have on your end-to-end process, just because I like you and we have a great relationship doesn't mean that I'm going to wait 3, 5, 7 days for even a finance quote on like larger transactions, right? Let alone getting the transaction done when I can build a relationship with someone who's probably equally as awesome. Not to, put anybody down, but there's a lot of great people in this industry. So I can have a relationship over here and also have that that speed and transparency that I've become accustomed to in my consumer life on my B2C transactions. Um, and not have to deal with all the friction of buying. So I think relationships are probably going to be more important than ever, but that doesn't give you a free pass to not have a world class experience when it comes to speed and efficiency for transactions.
That's so true. And with that relationship too, like I find myself as a consumer kind of getting annoyed if, let's say, a bank or a lender or something reaches out to me trying to give me something that I know that they should already know I have. Um, like I feel like technology can be used in many ways to prevent things like that from happening. So what do you, any thoughts on that?
No, I mean I agree. I honestly look at it like I like to think, and knock on wood, you never know what could happen. And but I like to think that I'm a pretty good credit profile. And anytime there's a friction point, I tend to have this feeling like, uh-oh, is there a flag? Did something go wrong? Like what happened? Do I need to go put a freeze on my Experian? Like what's going on? So any friction point causes or creates the environment for there to exist simultaneously some anxiety. And people don't like anxiety when it comes to things like this, specifically in B2B, right? A lot of people are seeking new hardware or managed service agreements because they're undergoing some sort of expansion or they're trying to capitalize on an opportunity. And having any sort of pause or stutter in that can really create the feeling of doom and gloom and dread. And that's part of the psychology in B2C that, or I'm sorry, B2B that doesn't really exist that much in B2C. Great, you had a hiccup with your mortgage, it's pretty easily fixable. But if you're an enterprise and you have an opportunity in front of you, you need to capitalize on that opportunity as quick as possible. So I think there's so much that can and should be automated. And it's not only that I think it, right? The data shows, and we're seeing it play out across the industry in real time. But there are a lot of people out there that are kind of in our industry in that wait and see mode. I really want to wait and see. And I truly think that as a a funder in this environment, or even like a reseller, distributor, VAR, anything like that, a dealer group, the most expensive thing you can do right now is to do nothing, because there's no such thing as standing still when it comes to technology. The world is still spinning. If you stand still, everyone's just going to pass you. So you have to do something, and you can start small. But if you're not making strides in improving your experience, I think that long term, you're going to lose. And it's going to be pretty painful for a lot of folks.
For sure. So I wanted to go back to something you said earlier. You talked about, all the friction that's there. And when, the borrower's experiencing that friction, it's, potentially giving them anxiety, right? How can you, remove that friction and create like a better customer experience for them where they don't have any of those roadblocks and they, have kind of more of that consumer feel of ease?
Yeah, absolutely. And I think this is probably like one of the biggest shifts that's coming is like right now, a typical finance journey starts with an application. And that application or that finance journey could be long after a quote for hardware or services or, software licenses has already been placed in front of the customer. I think the finance journey of the future is going to start with an intent trigger, a quote to acquire, product display page view, something like that. That's where the finance journey is going to start. You can start reducing and eliminating friction by orchestrating, which is kind of what we do, orchestrating and keeping everyone in the loop in real time, right? Communication is key to pretty much everything in this world. We know that. But there's this huge gap in what we do in this industry when it comes to communicating. I'm going to ask you for something via email. You're going to send it to me, and you're not going to hear back from me for 72 hours, whether it's good enough or not, or passes muster, or even if it was received. So just orchestrating the communication across all parties and keeping your dealers, your funding sources, your end clients all in the loop helps eliminate that anxiety tremendously. I mean, it's kind of like being in a marriage. If I could tell that my wife is upset and I ask her what's wrong and she says nothing, I know I'm in trouble. If my funding partner is saying nothing, I think that there's trouble.
That's true. Yeah, silence is never a good thing, right? It leaves you with that dread and oh no, what's going on? I need answers.
Yeah, silence can be the loudest sound in the world.
Yes, for sure. So I wanted to talk about embedded finance. That's something that we've been hearing more about in recent years. What's your take on that and, how it would improve the customer experience?
Yeah, absolutely. I mean, it's one of those terms that's kind of tossed around, but there are some people that don't really know what it means. There's some people that think they know what it means, but it's applied incorrectly. In our industry specifically, right? Talking about equipment finance, regardless of what type of asset class you play in, embedded finance simply means meeting people where they're at, right? Embedding finance where the buyer already is. And it goes back to what I was just talking about, where the finance journey will start with an intent trigger. So having finance tools inside of CPQs on your e-commerce sites, in your distributor portals, making it to where when I request a quote to acquire something, maybe I would need to buy 50 access points because I'm expanding my office. And I also need installation, a number of managed services, and a bunch of software licenses. When I go to my distributor or my tech VAR or whoever, right? Maybe I'm in heavy equipment and agriculture and I need to buy 10 backhoes. Doesn't matter. When I say, hey, I need to buy this, when I get back that quote and it says, here's the price, finance should already be attached. See, because right now, a lot of dealers, distributors, VARs, etc., they treat finance as an afterthought because it slows down their process. They want to get the deal done. They want to eliminate friction in their quote to cash cycle. So when someone gets, this massive quote and it's, hey, here's your quote, it's 300 grand. And I, as a business owner, am looking to reduce my upfront capex. I would like to see some sort of, breakdown as what's possible on finance, right? Especially now as we're kind of migrating to this everything as a service, everything's a subscription model, which I think is going to play a really much bigger part than it already is in our industry. But removing that friction of having to wait and ask and see what's available. Here at Valiant, what we're already doing in the space with a number of our clients, we're seeing massive increases in basket size and transaction size just simply by offering it up front. Because oftentimes what's in the CapEx budget for right now, what I can expend versus what I can, put into an OpEx budget as a subscription or a payment to kind of push it down the line and manage life cycles better, those are oftentimes different line items in a budget. So if I could acquire more without less upfront and I don't have to go back and ask for options, that's what embedded really means. Meeting people where they're at, where the intent is highest. And that intent is highest when they're trying to acquire. So wherever they're trying to acquire through whatever channel, you have to be right there, ready to provide a quote at the time where they're saying, hey, we need to get this equipment.
Yeah, for sure. And as you said earlier, that's kind of mirroring the consumer experience. Like anytime you buy something online now, it's like, do you want to finance this with Afterpay or do you want to, there's always some sort of option there available. So it would make it a lot easier, especially if you're just like, I need this now. I want my options. What's available to me?
Yeah. Yeah, it's
But
it's very interesting. I have five kids, and my 14-year-old daughter, I'm starting to teach her about credit, and I actually financed a Frappuccino at Starbucks to teach her about like this is how it works, right? I mean, you can finance everything, but the finance is offered at the point of intent when I'm ordering that Frappuccino from my 14-year-old. So the expectation is there for sure, and it's very interesting. What a time to be in the industry.
definitely. So another thing that's impacting the industry a lot and the world in general right now is AI. I wanted to hear your thoughts about AI and automation and how it impacts everything that we've been talking about. How do you see it playing out? Do you see it as improving the customer experience in some ways? Do you see it as creating some sort of challenges for lenders or borrowers? What's your take overall?
And that's something I spend a lot of my day talking about. Because again, it's that dark cloud looming off in the distance, and there's a lot of misconceptions around it. I think the biggest one being that AI is going to replace me and AI is going to automate everything. Look, it's truly not, because you can't hold AI accountable, right? It's hard to give AI a swift kick without breaking your foot on it if they mess up something, right? There has to be someone on the line to be held accountable. So the misconception is that AI makes decisions on its own, but in reality it just informs and accelerates our decisioning as humans, because it's able to map out patterns quicker. It's able to go through document classification and data extraction and fraud flagging, freeing people to focus more on nuance and to move with greater speed. AI isn't replacing credit officers. If anything, it's amplifying them. It's enabling humans to make better decisions faster. And really, the true magic behind AI is about the orchestration, right? Getting data to the right person at the right time to increase speed and operational efficiency. So AI isn't this, great great catalyst of change where our world is going to look completely unrecognizable. But it is a fantastic catalyst for change where it's going to enable us to be more efficient, more effective, make smarter decisions in record time, and really provide that world-class, fast experience. I said it when we first started. Consumerization is not about dumbing the process down. It's about putting a lot of the difficulty of the process of underwriting a complex transaction behind the curtain, like Wizard of Oz, and just showing this world class experience and being transparent about it while it's happening to alleviate some of that anxiety we were talking about.
For sure. So a lot of fintechs out there are already doing some of the things that we've been talking about. And a lot of companies in the equipment finance industry, are have been around for, a very long time. We've got banks, we've got established players who may have been in business for decades. What can those more established players learn from the fintechs?
I think what they could learn is fintechs have mastered experience velocity, right? So speed to value, not just speed to decision. Legacy institutions are oftentimes historically, it takes them quite a while to get on board with the new trend. And I get there's a lot of complex regulation around it, but fintechs lead with user experience and then build credit policy into that flow, not the other way around, where I think legacy institutions build their credit policy and their systems that way, where it starts with the policy and then the experience is second. The fintech playbook is pretty simple. Automate the obvious and then personalize the rest. Where we were talking about relationships, that's where you win. There's only so far that you can race to the bottom when it comes to pricing. So, in order to play and be effective and efficient, traditional lenders shouldn't copy fintechs, but they should really learn from their agility to test and iterate and measure and repeat and find that magic quotient where everything feels right, but it still works without taking away from the complexity of the transaction.
So let's say legacy institutions wanted to take steps toward what you just talked about. I know there's usually a lot more bureaucracy, there's a lot more red tape, they're bigger, so things don't necessarily move as fast. What are some steps that they can take today or next week to start them down that path?
Yeah, that's the $1 million question. I feel like that's what I spend the majority of my day doing, right? Is working with people through that problem. And I would say the first step is to start small, right? When I first got involved in business, a mentor told me, how do you eat an elephant, right? It's one bite at a time. Specifically when we're looking at legacy lenders with these massive, outdated technological infrastructures and just a ton of tech debt, they look at it and they can get overwhelmed. It's easy to feel overwhelmed, specifically when you have these companies that have made massive capital investments just to look at it, and it almost feels like one of those piles of sticks that one angry bird on a slingshot could knock over. So start small, right? Eat the elephant one bite at a time. Pick one customer journey in your flow and identify, isolate, and remove 2 to 3 points of friction. And, for lenders that have multiple programs in different industries and different channels, I would say step it back a little bit further and start smaller and pick one customer journey for one specific large scale partner or one of your main channels, whether it's office or construction and agriculture or IT and networking. Map out your entire journey and find those 3 pain points, remove them, and focus on orchestration, right? How can we connect existing systems? And then how can we modernize this to have a seamless flow and ensure that it's fast, it's frictionless, and it's transparent? And then, for legacy, and I guess I kind of got to say this, right? For legacy lenders and banks out there, um, partner with tech providers who can plug innovation into your current infrastructure without disrupting your risk frameworks. That's like one of the big things when we're talking to legacy, and not even legacy, I would say some of even the independents out there, right? Risk is everything. So you have to be able to move with speed and agility while also mitigating risk. And there's people out there that specialize that have done it very successfully. And not to plug myself, but present company included, that's what we do. So sometimes partnering with the right person or the right entity to help you plug innovation into the current infrastructure without disrupting the risk frameworks is really important. But don't wait for regulation or market demands to force you forward. Because your customers are already looking for this. So that's what I'd tell them.
That's great advice. So we are reaching the end of our time here. Do you have any final thoughts? If you could leave our listeners with like one major takeaway, what would it be and why?
One major takeaway is I would say that embedded and frictionless meeting people where they are, that intent trigger isn't a feature in lending going forward. It's truly the new distribution channel. I mean, that's it, right? Like that's what we all kind of focus on is distribution channels, and this is the new distribution channel is being in every channel simultaneously, orchestrating across channels and providing speed and reducing friction. It's not a fad. I mean, the industry's been talking about it for 10 years plus. And I was recently in Marco Island at the ELFA event and did a panel on this exact same thing. And someone asked the question, why now? We've been talking about this for so long. Um, we're now able to move with speed thanks to technological advancements and AI that we weren't ever able to do before. And the train is only going to get faster. So don't stand still. The most expensive thing you could do is to do nothing.
That's a great way to end this conversation, and so true. Ryan, thanks so much for joining me today. Thanks for the conversation. It's been great talking with you.
Awesome. Thank you, Rita. Appreciate it. See you soon.
See you.